If you bought a condo in the GTA, your equity has been shrinking for 4 straight years and has not stopped. A couple reached out to me last month. They bought a 1-bedroom condo downtown back in 2017. At the peak in 2022, they had built over $250,000 in equity. They felt great. They were planning to sell, use that equity, and move up to a house in the West End. Then I pulled the comps. The equity has dropped by over $100K. They had no idea. They've been watching the market from the sidelines and assumed everything was holding. It was not. And here's the part that changes everything for move-up buyers. While condos have been losing value, houses are doing something a little bit different. Their prices have been holding a little bit better. The gap between what your condo is worth and what a house costs has been getting wider. Waiting has not helped. It has made the move up harder. Today, I'm going to show you exactly how bad the numbers are, how many condos are actually selling, why developers completely stop building, and what's happening to rents. And at the end, the one number every condo owner in the GTA wants to know right now. Okay, let's start with how condos are trading right now. With the latest TRREB numbers of May 2026, we're usually 30 days behind in data. The sale to new list ratio for GTA for condos, 97%. That means sellers are getting 90 cents on every dollar they list for. A year ago, sellers are getting close to on par, but now 97% is the norm. That is about a 3% haircut on every listing. On a $600,000 condo, that's about $18,000 less than asking. Buyers are negotiating. And honestly, 97% is the average. I'm seeing some units, some of the newer towers going at about 94 to 95%. That's about $30K off or more of asking. So if you're a buyer and you're not making offers below risk right now, you're leaving money on the table. So days on market hit 34. Last year at the same time, it was 29. So condos are sitting about 5 extra days, which does not sound like a lot, but in real terms, that means more showings, more price reductions, and more uncertainty for sellers. Now, here's the number that tells you where the power sits, the sales to new listing ratio. And for GTA condos, they came in at 32%. That means only 1 in 3 new condo listings actually sold. Anything below 40% is a buyer's market. We are well below that line. And here's something that caught my attention. Condo new listings dropped 17% compared to last May. That's a big drop. That means fewer sellers are entering the market. That sounds like it should help, right? Less supply coming in, the market tightens, things stabilize. But there are still 8,700 active condo units across the GTA. That's a massive pool of competition. And with only 1,500 of them selling in May, that works out to be 5 months of condo inventory. Buyers have options everywhere they look. So even though fewer new listings are coming in each month, the backlog of unsold inventory is so large that it doesn't matter. Buyers still have all the options they want. If you're a condo seller right now, price to the market on day one, you're competing against thousands of other active listings. The days of testing the market at a high price and waiting for an offer, that's over. Every extra day your unit sits is a day the buyer's leverage grows. Now, this is a section that should get your attention because the sales data tells you what happened this month. The inventory data tells you where the market's going. According to Urbanation, there are now 4,300 completed and unsold new condos sitting in the GTA. That's a record. It has never been that high. So let me put that in context. 2 years ago, that number was about 800 units. 1 year ago, 2,100. Today, almost 4,300. That is 5 times higher than 2 years ago. And here's the number that makes you stop. Based on how slowly these units are selling, there are 92 months of completed new condo supply on the market. 92. That's almost 8 years of inventory at the current sales pace. So I want you to sit with that for a second. If no new condos were built starting tomorrow, it'll still take 8 years to sell through the ones that are already finished and sitting empty right now. And that 4,200 does not even count the 8,600 unsold units that are still under construction. When those buildings are completed, the standing inventory number gets worse. For the first time in at least 30 years, there is 0 new condo projects launches in Q1 of 2026. 0. Not a slow quarter, not a pullback, nothing launched. Meanwhile, since the start of 2024, over 11,000 condo units have been canceled. Think about that. 11,000 units that were planned, marketed, in many cases sold to buyers on paper. About 4,000 of those got converted to purpose-built rentals. The rest disappeared from the pipeline entirely. Now, here's the silver lining. And I do think this matters for anyone watching this 3 to 5 years from now. If nobody is building today and completions are dropping from almost 30,000 a year to roughly 13,000 by 2028, at some point, the supply dries up. That's how cycles work. And that's a future problem. Right now, The issue is too much inventory, not too little. If you're a buyer looking at new construction right now, you have leverage you have never had before. Developers need to move units. They need to show their lenders that they are selling. Ask for upgrades. Ask for closing costs credits. Ask for assignment fee waivers. You're negotiating from a position of strength for the first time in a decade. If you're a condo investor, this section is for you. And I'm going to be direct because the numbers are not very good. The vacancy rate for condo rental buildings completed since 2000 hit 5.4% in Q1 of 2026. 1 year ago, it was 3.6%. And the availability rate, which includes units where tenants have given notice, is now at 8%. That's a record. So what does that mean in dollars? Rents are falling. Net rents in Q1 average about $3 per square foot, down almost 4% from a year ago. And landlords are now offering an average of 13% off listed rents as incentive just to fill the units. That works out to be about $400 a month in discounts to get 10 in the door. So let me walk you through what this means if you're an investor carrying a condo right now. Say you bought a 1-bedroom for $650,000 in 2022. Your mortgage payments are at today's rates, call it around $3,200 a month. Condo fees, $500. Property tax, let's say $250. Insurance, another $50. That's like over $4,000 a month in carrying costs. And your rent after, let's say, the 13% discount might land you about $2,200 a month. You're negative about $1,800 every month. That is about $20,000 a year coming out of your pocket. So on a unit has already dropped significantly in value since you bought it. That's a bad position to be in. You're paying to own an asset that's declining, and the rent's not even close to covering your costs. That's the definition of a cash flow trap. And if you think rent increases are going to bail you out, look at the data. Rents are going down. They dropped almost 4% year over year. Vacancy is at a record. Landlords are giving away $400 a month in incentives just to fill the unit. The rental market is not coming to rescue investors right now. Now, does that mean you should sell? Not necessarily. That depends on your timeline, your other investments, and whether you can afford to keep carrying the loss. But you need to know the real numbers, and these are the real numbers. If you're finding this useful, hit subscribe. I'm just shy of 1,600 subs right now. And if you subscribe, it helps me keep on making videos just like this. So let's talk about where condos are actually moving and where they are stuck. In the 416 area code, there's about 1,000 condos sold in May at an average about 670,000. The sales to new listing ratio for condos in the 416 area code was 33%. The 10-year May average is 51%. So we are running at about 2/3 of normal absorption. That's a deep buyer's market territory. In the 905, the suburbs, only 526 condos sold at an average of 570,000. That is down 9% year over year, a steeper decline than in the 416. And in the 905, condo sales to new listing ratio, 31%, even weaker than the city. The 10-year May average out there is 55%. So the suburbs are running at barely half their normal pace. And that spread matters. So if you own a condo in the 905 area code and you're watching prices drop almost 10% year over year, you need to factor that into your timeline. The 416 is holding up better, but 33% sales to new listing ratio still means 2 out of 3 new listings are not selling. That's a lot of competition no matter where you are. So if you're selling in central Toronto, look at where comparable units in your building or your block sold for in the last 60 days, not 6 months ago, not a year ago. The last 60 days, that's your price. Now let me show you how we got here, because this did not happen overnight. In 2016, the average condo in the GTA sold for about 416,000. Then the run started going up. In 2017, it was 510,000. 2018, 550,000. In 2019, 580,000. 2020, 600 and almost 30,000. 2021, 681,000. Then in 2022, 758,000. That was the peak. From 416,000 to 758,000 in 6 years. That's a 80% increase. If you bought in 2016 or 2017, you're feeling great. Then the correction started. 2023 was 717. 2024, 702. 2025, the full year average was 667,000. Each year lower than the last. 4 straight years of decline. So that's a drop of 12% from the 2022 average. 758,000 down to 667,000. On a monthly basis, the decline is even steeper because 2022 peak was driven by the first few months of that year before the Bank of Canada started raising rates. You look at specifically February 2022, the monthly average was pushing close to 800,000. So from the true monthly peak to where we are today, the decline is closer to 20%. Now, here's what's important. This is not 2008. This is not a crash where everything drops 40% and bounces back in 18 months. This is a slow, grinding correction driven by three things happening at the same time: oversupply, investor retreat, and interest rates that went from 1.5% to over 5%. When you have all three of those forces pulling the market down together, the adjustment takes time. TD Economics described this as a long correction with a stabilization on the horizon. I think that's accurate. All right, save this one for last because I think it's important to understand everything we just covered before you see the number. We talked about 97% sales to new lists, 34 days on the market, a sales to new listing ratio firmly in buyer's territory. 4,200 unsold condo units sitting on the market, a record. 0 new launches for the first time in 30 years. Vacancy at a record. Investors bleeding cash every single month. With all that context, let's look at where prices landed by area. The downtown core average, $679,000. Toronto West, $563,000. Toronto East, $511,000. And we're looking at the east edge of Scarborough, Malvern, and Rouge, $426,000. There's a $250,000 spread between downtown and the east edge of Scarborough. Same city, same transit system, wildly different prices. So location still matters most than anything else in this market, especially for condos. If you're buying your flexible neighborhood, that flexibility is worth 6 figures right now. And now the number. The average selling price of a condo in the GTA in May 2026 was $639,000. That's down 6% compared to a year ago. From 2022 peak, $758,000. That's a decline of $118,000, almost $119,000 lost in value on an average unit. Now, let me put that in move-up terms. If you bought a condo in 2017 for around $512,000, at the peak, you had $350,000 in equity between appreciation and mortgage paydown. Okay, today, you have lost a significant chunk of that appreciation. And the house that you want to buy, it's probably dropping slower at the moment. And if you're a buyer, this is the most negotiating power you've had in years. 4,200 unsold new units, record vacancy, developers cutting prices, use it. If you're a seller, price to the market. The comps do not care what you paid. Every week on the market is a week where a buyer finds a better deal somewhere else. If you're a condo owner thinking about moving up to a house, run the numbers now. The average detached house in the GTA is sitting about 1.3 mil. The gap between a $639,000 condo and a $1.3 million house is over $700,000. The gap has been growing because the condos are falling faster than houses. Every month you wait, your condo loses value and the house you want starts holding a little bit better. That move gets harder, not easier. You're serious about moving up? The time to start planning is now, not next year.